I'm so excited, Sonya, that you're here with us. And Immad, we don't get to do this with you very often. So what better day than on your birthday? So today what we'll do is we will run through some questions. Everyone submitted questions when they RSVP'd. So my team went through and we pulled out some really great ones. There were lots of really, really awesome questions. So thank you to everyone who submitted one. We'll run through a set of those, and then we will open it up towards the end to see if anybody has any follow-up questions, things like that. So for those of us, or for those who've joined us, feel free to use the chat to submit questions, or you can use the Q&A feature in the webinar, whatever feels right. So I think with that, we can get started. Immad and Sonya, I would love to start with just you doing the good old introduction, just for anybody who may be familiar with one of you but not the other, or just wants context for today. So let's kick off with that, and then we will move into the questions. Immad, do you want to start?
Sure. I'm Immad. I'm the co-founder CEO of Mercury, which we started kind of end of 2017. It's my fourth startup. So I've been doing various companies with various levels of success since 2006. And I'm also an active investor. I've invested in a bit more than 350 companies at normally pre-seed or seed stage, which is like a pretty broad set of companies, just things that I feel like need to exist in 10 years' time that are exciting with like great entrepreneurs. Over to you, Sonya.
And I'm Sonya. I'm one of the partners at Sequoia. I joined Sequoia about 7 or 8 years ago, and I focus on a few things at Sequoia, but primarily AI and FinTech investing. And so on the AI side, I led our investments in OpenAI, Glean, Gong, LangChain, a whole bunch of cool AI companies. And then on the FinTech side, I work on our investment in Nubank, and most recently was delighted to lead Mercury's Series C.
Amazing. And that is why we're here today. So let's jump in. There's sort of two sections of questions. We're going to start with the questions that are kind of about the Series C specifically and a little bit of the behind the scenes. And then the second half will be some more general advice for founders. We have a lot of early stage founders on the call, a lot of folks that are maybe just heading out for their pre-seed or their seed and on this journey. So that's how today will go. So the first question about the fundraise, let's like take an easy one. How did you two meet? What was that sort of like get to know you journey like between the moment that you met for the first time and sort of that first moment of like, okay, we're going to move forward with this fundraise?
So I was looking it up, and Sonya actually cold emailed me in October 2021. So
did I?
Oh, wow.
Yeah. You don't remember that?
No.
So that was the first time we met. And at that time, I wasn't fundraising, but I think one thing that entrepreneurs often screw up is they only do talk to investors like when they're fundraising. I actually think I've always talked to investors, I mean, I guess when Sequoia emails me, I'll talk to them anytime they want to talk. But mostly I try to like talk to every 6 to 9 months. I'll try to talk to like 5 to 10 investors. I think it's useful to build relationships and also just get a kind of pulse on the market. I think investors are actually like pretty open about like what metrics they want to see from you and like what's happening in the market and things like that. So yeah, I was actually interested, Sonya, how much do you cold email companies, and is that like a significant part of how you meet people, or is it a lot of inbounds as well?
Yeah, it was one of my biggest misconceptions about joining Sequoia. I kind of thought all these amazing leads were gonna show up in my inbox, and I was gonna, have my pick of the litter. And then it turned out that there was actually a huge kind of adverse selection problem where like many of the best founders were actually just out there building their companies and not cold emailing Sequoia. And I realized that actually I had to go out and find them. And so one of the first lessons I learned at Sequoia was like, there's no shame in sending a cold email. I would say almost every investment that I've worked on came from a cold email, actually. And occasionally,
Oh, really?
an entrepreneur will be very hard to get, and then I have to, work the intermediaries in the network. But many of these investments came from cold emails. And so, I mean, to everyone in the audience, like there is no shame in a cold email, an investor sending one, a founder sending one. If an email is very well crafted, like it will get read. And then as far as how I met Immad, I didn't realize it came from a cold email, but I feel like I was aware of you, Immad, like from day one, from your bus ads in San Francisco. You'd see Mercury everywhere, and then you have just you have this amazing online presence on Twitter where you're very organic, and you get a sense of who you are and what you stand for just from your Twitter account. But I feel like we didn't really get to know each other until we put you through the ringer on diligence for this round. Because for me, that's like the fun stuff when you really get to know somebody and what they're made of.
Yeah, 100%. Actually, in 2016, after I sold my company, I started kind of tweeting. Back then, I was tweeting these lessons and try to build like a web presence, which I think has actually served Mercury pretty well. I mean, I don't know if it's worth doing for everyone, but for me, like especially as we serve entrepreneurs, like giving lessons to entrepreneurs and things like that online has been always like a useful part of Mercury's success.
Yeah, 100%. Okay, so to follow on with the story, when I guess I made an assumption, or someone made an assumption in the writing of this question, but when Immad reached out regarding the Series C, I don't know if Immad reached out. How did that process go, sort of from that outreach to the decision to close it?
Yeah, it's funnily like Series C or B or A or seed have like a similar structure. Maybe it's just the way I do things, but there's a time initially, which is like make sure you have all the material ready. I don't think there's any point in talking to investors until you've got some data room ready, which like obviously when you're early on, there's not that much data in the first place, but later on we have a lot. And Series C is actually the first fundraise I've done where there's been a big supporting finance team. Actually, at Series B, we didn't have any finance team. It was basically just me, so I was doing everything. But this time, basically since December we started, late November we started putting together like all the data, and then I try to like practice the pitch quite a bit, both internally and then some existing investors, some like friendly entrepreneurs, just to make sure it like makes sense. It's funny because actually like think one of the best parts of fundraising is you're just forced to think about your business at a very high level, and in a way that like when you're just running your business, you just do the thing. You don't really step back and go, okay, how does it all kind of fit together into like a neat story that you can present in like 15 to 30 minutes. So that's like quite actually the first slide deck we had for this fundraise was like 60 slides. It was completely ridiculous. And then I think we got it down to like 14 or so. So there's a bunch of prep, and then the next thing is I have like a list of VCs that mostly I've previously talked to that I emailed and kind of kicked it off and ran the process with them. But tons of prep work before we got there.
And then oh, sorry, Sonya, I was just going to ask from Immad's perspective, and then we'll do it from yours. After you reached out and like started the conversations, from your perspective, what was that process from like first touch point to like closing the deal?
Again, we are a later stage company, so there's a lot of diligence that happens from like, hey, there's the first conversation. And I'd love to. I think Sonya did a ton behind the scenes, and one of the impressive things about Sequoia is like they do, I think, like probably 2x more work than everyone else to get a deal done. At least that's my impression of it from the outside. So I'd love to hear her process. But there tends to be like, I guess there's like probably 3 or 4 different kind of parallel paths. There's one which is around like, okay, what's the data, what's the finances, what's the retention, like all of the like questions that a lot of that at our stage gets done between like the finance team and Sonya and her team. Then there's another one around kind of getting to know each other a little better and doing follow-on questions, and like I think we did like at least 1 or 2 kind of strategic kind of sessions together, and sometimes that involves talking to other partners as well at a firm, and then there's kind of other types of diligence like talking to customers, talking to partners, things like that. And I feel like there was a 4th thing I was going to say, maybe those 3. So those kind of tend to happen in parallel, and then every firm has like some process. With Sequoia, eventually that kind of resulted in a partners meeting, which is like you go in person and pitch, the whole firm, or a significant percentage of it, and then there's sometimes some follow-ups and then the term sheet.
Cool. Okay, Sonya, from your perspective, what was the process like?
Let's see. Immad emailed us, and we immediately, I think he sent us a deck, And we saw the numbers and we're like, holy moly. And so we immediately rallied half the team and went and up and saw him in San Francisco for that first pitch. I think it might have been a day or two after we got the email, Ahmad. And there were 3 of us in that pitch. We sat through it. We were all jumping out of our seats to get to sponsor the investment because it was very clear that this was an exceptional business and this was the round that we wanted to do. So I remember coming out of the elevator and there were, 3 of us, and we're all like, let's do it. Like, who gets to do the honors? And then it was a little bit of a trying to figure out who would get to work with the company. And I was lucky enough to kind of get to take point from Sequoia. And then let's see. So in that first fundraising meeting, actually, we kind of get to like a 95%. Are we gonna get to a yes or a no on this round? And a lot from there is like confirmatory and conviction building. Like what a big part of our process is like, we really want to pressure test the thesis. We want to crystallize the thesis and then seek truth is one of our principles. And so, think through everything that could possibly go against the things that we believe here and like really, really put our thesis through a lot of pressure. And if the company kind of holds through that, then we proceed and invest. So we walked out of that first meeting thinking we want to be investors in this company. We're lucky in that Mercury is used by more than half of our portfolio. That's not a scientific number, but when we probably emailed 50 people, got a few dozen responses immediately of like, yes, I use Mercury, I love it. And this is from some of the most like tastemaker founders in our portfolio. They're like, we love the product, we love the design, it's so different from any other bank. People were saying things like, I was up and making payments in Mercury in the time that it took my, account representative to, answer an email from me to try and set up a meeting to open an account. And so it was clear that there was something really special and magical in the customer references. And then there was like, for us, that's the most important part. Listen to the customers, listen to what they say. And then there's a bunch of, make sure the numbers check out. Do we believe the model and the investment returns? Since this is a fintech company, we did a bunch of kind of bank regulatory diligence. So a lot of other stuff. And then actually beyond the customer, the other biggest thing is understanding the team, who they are and what they stand for. So we did a lot of back channeling on Immad and his co-founder, Jason. And so that came together we wrote this gigantic memo, sent it to our team. We had the partner presentation. Everybody was excited. And we presented Immad and Jason that term sheet a couple days later.
So it was pretty quick. What was the amount of time would you say from like kickoff to close?
2-ish weeks, right? Something like that. That's really interesting that you have like a 95% conviction normally after the first meeting. Is that if you don't have that 95% conviction, is like you just never go ahead? And also, what percentage of like the 95% conviction people still like don't work out by the end?
We typically will take a look at the data room and do a few references just in case, even if it's, even if we feel like we're most likely not going to do the round, because sometimes what we see in the data and what we hear from the customers does surprise us and it causes us to re-examine our priors. And so we'll typically, we'll turn over another card or two. If it's plausible, we might invest. But if we're 95% sure, then we really just sprint, it's email the entire portfolio immediately, internally, make sure we're staffed up to really analyze the data room very quickly, things like that. And so this was one of those cases. And there's definitely times when we think we're going to get there and we don't because we find something that we can't get over or things like that. But oftentimes, when we feel from that first meeting that we're going to get there, oftentimes that ends up being where we end up landing.
That's interesting. I think one thing that I like I think there's this interesting element of like, a lot of the rounds that have got done very quickly because, it's like a two-way thing. The VC has the meeting and has a lot of conviction, and so they move really fast. And then on my side, often it's the investor that I want the most. So I tend to do the most work for them, if that makes sense. So I think I'm like it's kind of like self-fulfilling in the sense that I think I'm a lot more convincing and like do more work on my side and I guess the team's side as well. So then like, when
Oh, totally.
because there's a lot of follow-ups and we were like very quick on answering things because we were like, oh
You
yeah,
guys were
we want to get
amazing
this
at
done.
answering things. And so that was the sense, I was like, I think Immad can tell that we sincerely, want to lead this round because like we're not wasting your time here. Like we're sincere. And I think you could tell that from how hard we were sprinting at it. And then likewise, I could tell from how hard you guys were sprinting at answering our questions that it was sincere interest on your end to work together as well.
Yeah. I think a corollary, is that the word? For that is like, I think often sometimes entrepreneurs kind of get stuck with investors that are just not being that responsive. And I think normally it's better to just move on. Yeah, sure, send them a second email or something. But if there isn't like a strong response after a first meeting, it's probably just not going to happen. And it's better to just like go, as Sonya said, flip another card and go talk to another 20 people rather than like get like, sometimes people are like, oh yeah, I'm doing a fundraise. I talked to 3 investors. I'm like, that's not a fundraise. That's like casual conversation. Yeah.
Immad, I'm curious, there's two different dynamics here where like you obviously were chatting with multiple funds, whereas Sonya and Sequoia were like pretty laser focused on this deal. Well, obviously they were looking at a lot of other deals, but for the purposes of this, what besides the sort of like lean in from them, like what really drew you to Sequoia? What made you excited about them? How did you decide to lean in on that process with them versus any other number of funds?
Yeah, I mean, there's obviously like a few factors. Coming into it, we had like our target list, and like Sequoia was at the top. And that's a combination of yeah, obviously a really strong brand. We sell a lot to startups. I think having like the best VCs as part of the round is powerful for Mercury and helps with hiring. There's a lot of kind of things that come with that. Every conversation I've had with Sequoia, I feel like they're really smart about. I feel like one of the things that's really important with VCs is you really want really smart VCs because they just ask better questions and like actually a lot of what investors do is ask good questions like both after they invest and before they invest because at the end of the day investors aren't working in your company 24 hours a day in the same way that you and your team are, but they can be very thoughtful in the way they like probe things, so having like people who ask good questions like through the kind of diligence process is really important. There's also, given the box we were in, like we're doing a Series C growth investment, right? There's not that many firms in that box, right? There's especially ones that are like active right now. So yeah, I think you can like cut the universe and then like pick your favorites kind of from that. So that was kind of our approach.
Okay, awesome. And then as we're talking about the Series C, but you just mentioned like sometimes the C is quite different from the B, from the A, from seed. There was a question about, this is broad, take it however you'd like, but what are the biggest lessons you sort of learned as you've gone through these different stages of fundraising? Like what might you tell a founder that's like, oh, what's it like? Like what's the difference between a C and an A? Or like what's a general trend or pattern that you might tell them about?
Yeah, I mean, maybe this changes at some later stage, but one thing that I've always been surprised with is like how similar it is in the sense that like you really, especially as a CEO, like you really have to like paint the picture of like your vision, the future, and like how this becomes like 10 100x bigger or whatever. Like it's not, that part doesn't change, and like a lot of the core parts of the story that like, hey, we're disrupting banking and banking's a huge TAM and like all those things, like a lot of those things are still the same. And I think some of those times I've pitched later on is when I've stepped away from that, where I've been like, oh yeah, it's just like, look at the numbers. It's obvious. Like it's not, it's because whenever someone invests, they're not investing in today, they're investing in the future. Like they're investing in like how to become 10x bigger, even at Series C. It's like, probably when it's seed, you're investing in like a super low probability that this is 100x bigger. And when it's at like, I guess, Series C, you're investing in a higher probability that it's 10x bigger. Obviously, we still want 100x, but like the probability expected value times is the probability times outcome, and that like flips a little bit. But in some ways it's very similar. I think the bit that is different is just like there's just so much more to talk about. Like at seed stage, it's like, most of the things are unknowns, and you're kind of trying to like really paint mostly the story. And at Series C, there's a lot of knowns. We have a lot of products. We have a lot of answers to things, and you do spend a ton of time. Like as I said, I started with 60 slides, so a lot of it's like distilling like what actually matters here versus like giving like a splurge of like everything that I could talk about with Mercury.
I will say, Immad, you mentioned kind of having this, the story being the same for each round. That is, for me, that consistency was a big part of conviction building in you. And just so you know, I think it's relatively rare to hear a pitch that stays so consistent at its core from the seed to all the subsequent rounds. And sometimes you get this, pivot here, pivot there, we're this company now, we're this company now. And that consistency and what you stand for. And I think, you and Jason, I think especially is fond of this 100-year plan for Mercury, just like the long-term thinking and the consistency is a big deal for us. And so maybe a note to the founders out there is like, as you pitch investors, if they're a multi-stage firm, they're going to hear the story multiple times. And the consistency of that story and then your track record of executing against it is a huge part of conviction building for the later stage rounds.
What would you say, Sonya? I know you see a number of stages. How would you respond to the same question? Like, what do you think is the same across different stages of fundraising versus what changes maybe from the investor's perspective?
Team number one at all stages.
Yeah.
And that's probably almost a contrarian take at the growth stages, but I really think it's team.
And when you say team at like a larger stage, are you talking exec team? Are you talking who they've been able to hire? Like, what does that mean to you?
Founders.
Founders.
And then it also manifests itself in who are the execs who they've been able to hire. We like to spend time with, and we did spend time with, I think probably half a dozen of Immad's execs. And then we also have data science signals to give us a sense of the caliber of the bench within kind of each part of the org. And so that's all a reflection of team quality. Like great people like to work with great people who have a great vision. And so to me, that's the most important thing from seed all the way through the late stage growth rounds. And then I would say Series B is, so I started investing typically at the Series B. That's when the company is kind of just like at the inflection point, starting to find lightning in a bottle, inflecting in some way. And they're really looking to, oftentimes it's, the founder doing founder-led sales themselves. They're really looking to professionalize their go-to-market motion, whether it's, marketing, sales, et cetera, because they got the early beginnings of something special and they want to they want to amplify it. And then for Series C and beyond, it's, the company has reached product market fit. It's often on a multi-product journey that's starting to work. In Mercury's case, that was a big part of why we leaned in for this round as well. So the multi-product journey, continued compounding at scale is, a lot easier said than done. In the even later stages, there's even more kind of metrics and evidence that should support the case as well. But to me, team is the North Star.
But to be clear, when you say team, like you don't want to see like 3 slides on the team in the pitch deck, right? This is much. I feel like team is normally mostly like clarity in thinking and like how they talk about their business, right?
Yeah, I mean, on team, I would say there's 2 things we're looking for. Well, no, I would say there's a lot of characteristics we're looking for. How ambitious is the vision? Are they underdogs? Do they feel like they have a chip on their shoulder or something to prove? There's a lot of characteristics we're looking for. The way we go about trying to identify it, there's 2 primary ways. One is the meeting, and the second is references and the person's background. And so in the meeting, like we're really trying to tease out who is this person, how do they work, what do they stand for, what would it be like to work with this person? Like one of the questions we ask ourselves is, would I be excited when Immad calls me at 8 p.m. in the night, with some Mercury emergency? Hasn't happened yet, but yeah, I would be excited. And so that's like a huge part of it. And then your background, what you've done, what your references say about you. In the case that in the case that people are sending cold emails, like I'll respond when I see a really well-crafted cold email pitch, because that shows logic, clarity of thought, etc. More so than a slide deck.
I think sometimes people also underestimate, like, I'm calling this networking, but like, I'll use the word networking, but I mean like relationship building more. But I think people underestimate networking with other entrepreneurs. Because I don't know everyone Sonya talked to, but I assume it was other entrepreneurs that like know me because I've been around a while, but I've also like been to conferences and been to events and just generally tried to be helpful to other entrepreneurs. There's obviously I've done it for like 15 years, so now there's like a big bench of them, but I often feel like I mean, this is part of the benefit of being in the Bay Area, that there's a lot of casual ways to do this, but I do think a lot of success with investors is like actually having like a strong entrepreneur kind of relationships that like can act as your references and can like introduce you to investors and all that kind of stuff.
Yeah, building that social capital, I feel like it's definitely one of those things. Sonya, I'm curious, you said you do a lot of fintech investing. I'd love to hear a little bit about how or what stood out about where you said you saw the numbers and you were like, holy moly, but like what stands out about Mercury in comparison to other fintech companies, other banking solutions, things like that? Like what got you really excited about it?
Yeah, let's see. I've been excited about the story since the early days when I first heard the Mercury pitch. I was skeptical whether it would work though. And the thing that Immad did was he just like executed the hell out of it and showed me I was wrong, and it worked. And so let me explain a little bit about, what I see the story as and why I was skeptical at first. The story is that, banking as we know it is broken. And that, there's this patchwork of other kind of financial services and solutions that have tried to become band-aids on the system in order to make it better. But to actually kind of change the way that we work with money, you got to start with like the core banking relationship, the core checking account, and that direct relationship. And the thesis was that the bank account is the system of record for money, and once you're in the flow of funds, once you're the system of record for money, you earn the right to cross-sell everything that touches that, whether it is corporate cards, whether it's accounts payable software, things like that. And so I love that thesis. Like you're the system of record, you're in an incredibly powerful place, and you can cross all these other things. That's an amazing thesis. But like the thing that's hard is it's really, really, really hard to catch SMBs at the point of company formation and get them to open a bank account with you. Distribution is insanely hard because you can't just catch somebody who already has an existing bank account somewhere else and serve them a Facebook ad and get them to move their bank account over to you. It just doesn't work that way. And so I was skeptical of whether he could get distribution going to get to scale and reach the number of SMBs he needed to reach in order to, for Mercury to become a large platform company. And I was like, if you do that, if you get distribution working and if you execute on multi-product, this is gonna be a massive company. I'm just skeptical of whether somebody starting from that starting position can work. And like Immad absolutely proved me wrong and just executed flawlessly. I'll say like another thing is seeing the way that Mercury responded during the SVB crisis was really big in my book. We look for different things in different companies, but for bank, quality and strength under scrutiny and the ability to be kind of unflappable in times of crisis, those are some of the most needed traits. And like, I remember, I couldn't sleep when the SVB thing was happening because so much was happening in our own portfolio and it was just all hands on deck. And the way Immad and Mercury responded to that crisis, I think you guys were the number 2 largest recipient of fund flows from the SVB crisis, if I remember correctly, Immad. The way that there's a customer support rep that put his cell phone number on Twitter. Everyone was calling him, opening accounts. He stayed up all weekend. The product team shipped this page that would allow you to kind of see where your money was and like bring transparency into the process, because opacity is what causes bank runs in the first place. And just the way the entire team rallied during that weekend, like strength under scrutiny, one of our most important attributes we look for, but especially for a bank. And like when I saw that, I was like, I really want to work with these guys.
Mm.
To be clear, we're a fintech company, not a bank. But but yeah,
Sorry.
that was a
Okay,
great.
we'll put the disclaimer in the chat.
But yeah, that was a great moment for the team to step up. But I also think like those moments happen because of like all the background like prep we've done. Like we're very customer centric, and we'd already scaled to this level where we could support like a large inflow of like new customers and things like that. So there's definitely like one of those like luck comes to the prepared kind of things.
Yeah, Sonya, that was my 4th week at Mercury. So I had a sort of similar
Oh,
experience.
fun week 4.
Where I was like, oh, I was so pleasantly surprised, because that's when you don't know what it really looks like till you're in it, and like, especially with situations like that. And that was one of the moments where I was really grateful to be on the team. So I'm with you on that.
Totally.
Okay.
I feel like it was a make or break moment for Mercury, because
Totally.
I think the SVB served a really important role in the ecosystem, and that event created this vacuum for something like that. Who is going to be the bank or banking platform service asterisk, not a bank, that'll support the entire Silicon Valley ecosystem. And Mercury was in position to be the challenger to go win that. But they like really rose to the occasion. It could have broke either way, and they really rose to the occasion to fill that vacuum.
Yeah. All right, we are in the second half now of this session. So I want to turn our focus a little bit to some advice you might give to founders. Again, we've got a lot of earlier stage folks who are looking toward this as an end goal or as a future goal. And you all are both so experienced in the space. I know a lot of them. Sorry, my senior dog is getting a little senile, and he's just seeing things right now. Okay, so we will start with the question of how founders should balance narrative and metrics in their early stage, especially. And Immad, you chatted about this, I think, a little bit in that trend and through line, but I think there is this sort of like shifting balance between how much of it is like dream with me versus like this is the data, particularly when startups are pre-revenue. So, and the second half of this question is in a rapidly evolving space like AI or FinTech. So maybe how much dream with me and narrative versus metrics in a space that's changing quickly. And I think either of you can weigh in from your investing experience here.
I don't really see them as like separate things. Like I think the point of the metrics is to improve the narrative. Like when you have a narrative, there's a bunch of things in it that like, especially at the early stage, you're saying they'll work, and like, you're like, oh yeah, I think people will really want this. But whether it's distribution, unit economics, like, sales efficiency, there's probably a bunch of different like things metrics can prove. And what really happens over time is like you sneak in the metrics into the narrative. So you say, yes, this is working, and now our market share is this much in this category because we've actually delivered on the story of like people wanting this. So yeah, I think I actually try to, especially at the early stages, you want to actually like, tell founders this, like you want to try to figure out like what are the metrics that would make your story better, and then try to like actually spend the next 18 months make those metrics better, which is like, I mean, obviously we're talking metrics and narratives, but like that's kind of what building a business is, right? Like you want to go grow that revenue, or you want to like improve your unit economics, or whatever it is that makes your like narrative better.
Sonya, what do you think?
Nothing to add. Great answer.
Perfect. Okay, so when you are doing due diligence, both of you, and this is fun because we've got Sonya who focuses on B plus and Immad who's doing angel, probably or Immad, where would you say you're generally writing checks? Just for
mostly seed stage, I would say.
At seed stage? Okay, great. Just so that everybody knows. What are you looking for in a company when you're doing your due diligence? So Sonya, I think you already detailed this a little bit. Maybe Immad, it would be helpful to hear from you when you're looking at pre-seed or seed. Like, what are you looking for in diligence?
Yeah, I don't do lead checks. I'm obviously busy with Mercury, so my diligence is like way softer than what Sonya does, and what a lead VC would do. I would say there's kind of two types of diligence for me. It's There's one which is like, I know the space really well, or I know the founder really well. And then it's very much just like, making sure I understand it and I'm excited about it. And I can like really feel like that founder can rise to that occasion, which is a significant set of companies I do. And then probably the other set is mostly things where other people are leading the round. So, there's some assurance you get when there's like a lead VC and they've, there's someone you respect and they've done the work. And then for me, it's a lot of it's like, okay, do I really believe that this market size is big enough? Like to me, I'm very focused on like how big is the market and how big could it be, and then how, actually what Sonya said about like if someone calls me at 8 p.m. and like mostly I talk to founders when they call me at 8 p.m. It's like, am I going to be excited to talk to them? Like, are they, is it going to like I mostly invest because it's kind of fun to help entrepreneurs. Like that's my main reason for investing. So like, will I have a fun conversation? Like, is this a market I'm excited about? Is it a founder that's like, like authentic and they really want to like solve this big problem and I'm going to be excited to like be part of that journey. That's kind of like my diligence process.
Yeah. Sonya, from the fund side, is there anything you would add? I know you don't do a super early stage, but is there anything you would add for the early stage founders that you think most funds or leads would be looking for in due diligence that they should keep in mind?
Even at the seed stage?
Yeah.
The seed stage, it's a lot of team. You need some story, right? There's some idea of what you're going to go after, but our expectation is that the story, like the market you're going after, is going to kind of zig and zag for a little bit. And so we kind of want like talking about a company, talking the market is almost for us really just more about the team than about the market at the seed stage. It's like, is this person, have they identified a really interesting large market with market tailwinds behind them? And it often, like, as you talk through it, it tells you more about the team than about the market. So it all just comes down to team. And when I say team, I mean founders in this case.
Yep. Makes total sense.
Sonya, especially since you do AI a lot, like how much do you worry about competition? If at least from the outside, as not an AI specific investor, it feels like a very competitive category where every idea has like 5 companies. Is that a big factor or not that much from your perspective?
We're just vibe investing. No, I'm kidding. It's a huge challenge. And so I would say it's really, really situation specific. And there have been times when companies have been flying in their numbers and we won't do the round because as we dig into our diligence, it kind of points to low switching costs. People want to try the alternative. And then we end up thinking, not a ton of market cap is going to accrue to that company and they just can't build deep enough of a solution. And so that like, there's been entire kind of categories, lots of companies that we haven't invested in because we're worried about competition. On the other hand, I would say some of these markets are a lot stickier than meets the eye. And so to give an example, medical transcription, when I call healthcare CIOs, they're like, we implemented this thing. You are not ripping that thing out of my, like, you are not ripping that thing out, like over my dead body. And so in that case, there's a ton of stickiness and those people are very happy with the products that they've chosen. And so it kind of ranges on that spectrum. And I think we just have to make a judgment call on what are the market structure dynamics, what are the switching costs. Oftentimes people will tell you that they want to switch, but actually not switch. So like, what do we actually see in the data? And then we kind of add that all up together to make a judgment call on whether to invest or not. But it is the number one thing that we debate for AI companies, because historically, a lot of companies, a lot of the moat was the tech, right? Like when we invested in Zoom, like a lot of the moat was the tech, like a lot of the telephony infrastructure that Eric Yuan had built. In the case of AI, a lot of the tech kind of comes from the foundation models who compete with each other, right? And so when everyone has access to 95% of the same technology, it really does raise the bar on what moats and competition are.
Yeah. Plus, as the foundation models get better, the tech, like, people like all into RAG and all these things, and like some of those advantages get like competed away as well.
Sam Altman had this really great line at our AI conference, which I think he said publicly as well, which is like, build assuming that like the models will get better. And like, if you are excited by that, you're probably building in the right space. If you are upset when the models get better. Like, you should probably think long and hard about what you're building. And like, I think that's really important. So like, for example, Harvey in our portfolio, they help lawyers with you can think about almost like a ChatGPT for lawyers. But like, as the models get better, they're able to provide way deeper document analysis, for example, because these models can now reason through much longer court cases and entire corpuses. And so the models themselves get better and better and better. We try to back the companies that like benefit when the models get better. There, of course, is the question of like what happens when models just do everything. But like, I hope by then I'll be sipping a margarita on the beach somewhere, and we'll be in this wonderful age of abundance.
Amazing. Speaking of AI, how do you differentiate for yourself as a fund between sort of these hype cycles and these like long-term potential? We've been through these through a few of these recently. Maybe using like 2020 Web3 crypto moment as an example, using AI as an example. Like, how do you all talk about hype cycles versus sort of long-term potential?
That's a good question. I think it is important to understand like what are the new technology trends, and AI is obviously a big one, and before then I guess there was cloud and mobile and all those stuff, and those things just open up a whole new set of markets, and often incumbents can't adjust to them. So it's important to know that, but I think it's also like you can't just do it because other people are doing it. You really have to come up with your own perspective, and ideally you're ahead of it, right? Like I think I guess Sonya doesn't necessarily need to be ahead of it as a Series B or later investor, but as a seed investor, like the time to invest in model companies was 2019, not 2022, and that every 6 months in AI it moves so quickly that at the seed stage at least the time to invest in the thing is way before like the thing is just exciting to everyone. Like like if you like Cursor and all these like develop agents, right? Like it's too late to invest in those at the seed stage. So you're always like, and that's actually kind of the fun part of it. It's like, okay, where's this going, and what is actually interesting in a few years' time, rather than like what's interesting today. And by the time it's interesting today, it's probably too late at seed stage.
I will say, even though I'm a growth investor, we still really try to navigate before the hype cycle as well, because I think is a big part of our job. And so, like, for example, we did OpenAI in 2021. It was like like more than a year before ChatGPT, because we saw the technology and we were like, holy moly, this is the future. This is going to change how we work. Mallory, to your question on hype cycles, for me, it all comes back to like talk to the customer. Is the customer getting value? If the customer is getting value, then like to me, a lot of this hype is justified. If the customer is like, oh, I hope one day I will see the value, then it's a hype bubble. And so I would say there's pockets of hype and then there's pockets of value in AI right now. It's not one size fits all. And so for me, it all comes back to talking to the customer to try and understand, what companies, what products are actually building things that change their customers' lives.
Yeah. Okay, I'm going to go off book a little bit and ask you both a question that has come up a couple of times in the chat. I think it'll be an easy one though. So I think we've got a lot of folks on this call who are reaching out to investors for the first time. They're putting their pitch together for the first time. What advice would you give in terms of like, Sonya, you've mentioned a really good, well-crafted cold email. And, we've talked about pitch formation and sort of the importance of storytelling and things like that. Like, what are the key things they should really be making sure are coming through in that initial either pitch or email to catch an investor's attention?
I would say it should be short. If it's long, it's like very easy to archive. It needs to very clearly explain like what you're doing and why it's interesting, and then it needs to give some social proof. Like either it can be traction, like, oh, this is growing at this much and making this much revenue, or it can be like it's also funded by X, or I also worked at X. Like it needs to, especially if it's a cold email, it really needs to like sell something beyond just that idea. It needs to have like something where you can really hook someone and say, oh, that's actually like that's an amazing accomplishment. I should really talk to this person. yeah, I don't know what Sonya's inbox is like, but my inbox is crazy. I get a ton of cold pitches all the time, and it's relatively rare that something like stands out from that. So it is very much like a standing above the noise kind of thing. But it's doable. I mean, I think it's like you have to have a compelling hook and a compelling kind of social proof around it.
Yeah.
Well said. I would boil it down to story, evidence, team. Story, and by story I mean like 2 sentences on why this matters, how big it can be if it works. Evidence, like what evidence so far do you have that it's working? And team, like, you know, what in your background gives you the unfair advantage to go build a giant company in this space?
I
Yeah.
would also say, like, try to get an introduction. I mean, I know, like, that's often people are like, oh my God, it's so hard, but it's not that hard. Like, I've invested in 350 companies, so there's like 600 founders there that you could probably get an introduction from. And then, like, Mercury has 160 investors. Like, they could introduce me. Like, there's a lot of people that could introduce you to me. And if you really can't get any of them to introduce you, then, like, you know, you need to kind of network a little harder. That it's I don't think the bar is like that hard to find someone that will introduce you to me. And I do think it's like uh, I think if you have a really hard time getting there, then like I think you need to do a little bit more of the groundwork to be able to get there.
Yeah, I think that warm introduction thing too, it's like such a hot button topic, I think, for founders because of the accessibility of it and because of the sort of unfair advantage that a lot of people have. But I always tell people too, like that you're getting so many extra, like again, with the social capital points, like getting an immediate sort of vouch from somebody really does help that recipient of the intro feel like,
Yeah.
oh, cool, this other
I'd
person.
also say like startups aren't hard. Like if you think this is the hard bit, then like I'm sorry, like this is gonna be, yeah, it's hard. Just go figure it out. Like it's not. I don't think like it's hard is like a reason why you shouldn't like why that's an excuse, right? Like if you can't figure it out, then like you're gonna have a hard time in your startup.
Yeah. Okay, let's see. Okay, let's talk about product market fit for a minute. I know this could be an hour-long conversation. Let's try to do it in like 2 or 3 minutes. What do you think? I think product market fit's another one that is like a very annoying thing for a lot of founders because there is no real definition and like people are asking about it. How do you sort of define it? Maybe Immad, you can tell a story of like when you felt that Mercury had it or when you got that feedback that it had it, or what does it mean to you in terms of something you're looking for as in an investment?
Um, mostly at seed stage, the company does not have product market fit when I invest. That's not always the case, but mostly I would say. As an entrepreneur that has like achieved product market fit twice, like it's very obvious when you have it. It's not like it doesn't necessarily leave like a question mark of like, oh, do I have it? Maybe I have it. Like it's just extremely obvious. I think the way it shows up is like you wake up in the morning and you have a bunch of people using this thing that you're like, where did these people come from? And like, and you don't spend at least like often it shows up in distribution, I find at least, and maybe there's some industries where it's different, like maybe in enterprise sales it's like different, but like I do think it's like an unfair and fast distribution, even in enterprise sales. It's like people respond to your emails, the sales close quickly, and it seems like the distribution bit is easier, and because it's easier, it tends to put strains on everything else, like the product breaks, the ops break, and all that kind of stuff. So I think most people who've had it don't have like a question mark on whether they have it, and so it's like I think in some ways it's easy to know whether you have it. I think the bit that's hard is like probably most companies come across it in a unique and different way. So the lessons that entrepreneurs have like aren't like globally like accessible. I think they are like probably like situational. You know, in terms of you're right. In terms of Mercury, we really had it at launch, and like it took me like 6 to 12 months to like convince myself that like the launch wasn't like a fake product market fit. It was real product market fit, and we were like we just refused to like hire that aggressively because I was like, oh, this might just be the launch and this might just be blah. Like we should like not lean into it. And a year later, I was just like, this is real, and like I need to like actually go higher in front of it because we were just like so stretched for a year because we were always like underhired for like the speed at which we were growing. In my previous company, we it was actually our fourth pivot. It was a very long journey. And it actually took like, even in that fourth pivot, it wasn't obvious. It took us like 9 months of like talking to customers and iterating before like we really got in the flow of it. But you know, obviously there was like early signs of it was working, but it was like a much more of an iterative path to product market fit there.
I would strong +1 Ahmad's point on, like the distribution, and you kind of know when it's happening. And the way I would try to boil it down is, are you pushing or are you getting pulled into the market? And, we have a bunch of Sequoia-isms that kind of try to encapsulate that. Are the dogs eating the dog food? Is there sucking sound for the thing? But like fundamentally, it's like, is the market ripping this thing out of your hands? And you can't keep up with demand, or is every kind of sale a push? And it feels like it's a push, and until at some point it just kind of converts into a pull. And I think that's the feeling that entrepreneurs describe to me. I have never found product market fit at anything.
Awesome. Immad, there have been a couple questions of like, how did you get Mercury to the first sort of like fundraising moment? Like, how did you go from like, there was no Mercury to you raised, I don't know, I actually don't know the story of like, was it angels? Was it a pre-seed round? That sort of thing. Like, how did you make that?
The first round?
Yeah.
Yeah. So finally, I had this idea in 2013, and then at the start of 2017, I was like, I sold my company, and I had time, and I was like, oh, I really love this idea. Let me go investigate it. And I basically was like, I knew how to write the product. I think everyone would believe I knew how to write a product, so I didn't need to prove anything there. And at least from my perspective, I knew people would want this. Like, as an entrepreneur, I had like this visceral feeling that people would want this. So at least with, enough for a seed round, I didn't think I needed to de-risk like product or distribution. So I spent all my time on like kind of regulatory partnership stuff, which is like, I'm an engineer, so it's not like neither of those things were like the natural thing for me to do. But I was like, this is by far the biggest risk thing. So I spent actually the first 4 or 5 months just like talking to lawyers, talking to fintech entrepreneurs, talking to potential partner banks, talking to like Visa and MasterCard. I just spent so much time just like learning and talking to people. And then, we also went and got like some term sheets from some partner banks. And I really wanted to like show up to a seed thing because, I knew it would take a long time to build it. And, I wanted to raise a seed round before it. So I think really focusing on like, what is the biggest risk and how do I answer that risk was like by far the most important thing. And, for us, it was really all about kind of who do we partner with? How do we actually make this product? And what is the kind of regulatory framework around it? And yeah, so I walked into these. I mean, I did have like some designs and some code was done, but really the bulk of the work I did was like I had like term sheets from some partner banks, and like I could reasonably say to the seed investors like, this is how it's gonna go live, and this is what the economics look like, and how I can do it, kind of thing. So ton of it was just like this prep work, and then I started fundraising. And actually, I mean, some of that was also just me believing that I could do it as well, right? I didn't like come into this idea going like, oh yeah, this is going to be easy. I was like, I have no idea how to do this. Like, let me try to figure it out. And once I got like enough confidence in that, then I started fundraising. And as part of like that process of like doing the research, I'd also talked to a lot of fintech investors. And the person that ended up like leading our round, Alex Rampel, I talked to him a couple of times because he'd actually invested in a few chartered banks, and he'd been a fintech investor for a long time. And so the final meeting I did before, I was not actually even thinking about it as a pitch, because I was like, hey, I literally have a deck and like these ideas, and this is a multi-stage VC. I really thought it would be much more of a get their feedback on the pitch kind of thing. But after the meeting, he was like, okay, come in for a partners meeting in like 3 days. And they gave us a term sheet that day. So it happened really quickly in the end. It was like, I started fundraising on a Monday and I had a term sheet like on the Tuesday, the week after. But there was like a ton of prep work and like thinking and de-risking up to the point where I started fundraising.
Yeah, I was going to say, I feel like that's such a valuable story for a lot of the people on the call, because I think sometimes that like pre-product fundraise is a big mystery of like, well, what do I just show up with an idea and a deck and like some designs I made in Figma? Is that enough? And I think the point of like, just because you're pre-product doesn't mean you have to be pre-moat or pre-like conviction or pre-proof points. And I think that story is just such a great example of that, where like you had developed, you weren't coming with nothing, you were just coming with the most important things first, and the things that it would take a lot of other people, any competitor, a long time to catch up on, whereas the product was actually a little bit of the easier piece. I have certainly learned from my time in FinTech now that,
I mean, it's not that the product is easy. It's just like I felt that most investors would believe I could build the product. So it was
right,
just like
because
not
you
the
had
thing that I
that.
needed to de-risk.
Yeah, that makes sense.
I built a lot of product by that point. But yeah, I just had to convince people I could actually do a FinTech company, which was the harder part.
Yeah, that's awesome. All right, cool. We are at the top of the hour. I know there were a bunch of questions that we did not get to, a lot of really good ones. So I'll see what I can do to chase Immad down for some async answers that maybe we'll share in our follow-up. But Immad and Sonya, thank you so much. This was really great. I hope this was fun for you. Sonya, I hope this was an okay way to spend your sick day. And
It was
Immad,
the best.
you enjoyed your birthday with us. But this was really great. Thank you everyone for joining. And we'll share a link to other events like this in the future in the follow-up email as well. So really appreciate you. And we recorded this, so we'll share the recording as well with everybody. Thank you all for being here.
Bye.
Have a wonderful Wednesday.